Good morning to all of our viewers. I know most of you are going to be seeing this on our website and not real time, but we appreciate your attention nevertheless. We're right at the middle of the time to file your 2024 income taxes. And for most of us, that just strikes a blow to the heart because you think, oh my God, do I have everything I need for my records? At least that's how it affects me. And we also understand how difficult it is for particularly drivers when you're on the road most of the time to have the proper records and to make sure that those are being updated as you need. And I'm hoping that either Todd or Michael can share some thoughts with us. I think the days of having all your receipts in a shoebox are probably over. But I'm very familiar with that concept of record keeping and dating back to my very early years in the trucking industry. So first of all, I'd like to introduce Todd Amen. Todd is the founder, president, and CEO of ATBS, American Truck Business Services. He was co-president of Trans-Western Express Limited, a family-owned truck line operating in the contiguous 48 states and Canada. In addition to his work with ATBS, Mr. Amen is a recognized leader in transportation and finance and is also on the board of directors of the Truckload Carriers Association. He is a graduate of Colorado State University with a Bachelor of Science degree in Business Administration with an emphasis in finance and marketing. And I will tell you from my many years in the industry, he is one of the most respected people in our industry, going back many, many years. And much of that is because he understands the challenges that you have as a trucker operating and trying to keep everything else straight. He is going to be joined by Michael Schneider. Michael is the current controller and former tax manager at ATBS. He attended Western State Colorado University in Gunnison. He received a Bachelor of Arts degree in accounting and a minor in business administration. Michael started his accounting career with ATBS in 2010. He passed the enrolled agents exam in 2016. That is an exam that is administered by the IRS and is the highest credential awarded by that agency. That is very impressive, Michael. So with no further ado, I will kick this over to either one of you who is going to start.
Karen, thank you so much. The last time we got to do this, it was in person in your office. And if I remember, it was in single digits in Colorado. And so it was really nice to be in Arizona with you. And, sure enough, we were in single digits in Colorado again this week, but I'm unfortunately in Colorado, not in Arizona with you. So good to join you via the Zoom call. We get it done one way or another. So I'm going to just start with a few things. And really our goal today is going to be to just give you information about taxes for truckers, because I heard it said once that the IRS code has more pages in it than the King James Bible. If you've ever read the Bible, it's a pretty big book. So the IRS code is confusing. It changes often. And there are things that relate specifically to truck drivers, and it's gray. It's not black and white. So Michael and I are going to just talk about things that relate to you and your business, whether you use ATBS to do your taxes or whether you use somebody else. Really, our goal is to educate you, because a smarter person can save money on taxes. I learned that early on in my life when I had a large tax bill one day. I had sold a piece of real estate, and after I did the tax return, I found out about a 1031 exchange, and I could have saved tens of thousands of dollars doing an exchange of real estate because I bought something right after that. I was like, well, to my tax person, why didn't you tell me about that? And they said, I don't know. So what I've learned is the smarter you are about your own personal taxes, you know the right questions to ask to make sure your preparer is doing the best job for you. So I'm going to start off with one, and I'll also say that ATBS, will prepare 15 to 18,000 state and federal tax returns a year. We're the largest tax preparer for truck drivers in America. We have a good relationship with the IRS. So we're not tax cheats. We're not going to help you cheat the IRS. What we're going to help you do is pay the lowest amount in taxes that you're legally liable to. There are people out there that will be tax cheats that will tell you, here's how you cheat the IRS. You know, in my professional opinion, it never pays to cheat the IRS because at some point you'll probably pay for that. So one of the best ways, because Karen, I know your client base and they're smart, good truckers that make a decent amount of money. And if that is the case, one of the best ways to save money on taxes is just simply through a corporate structure. And so I don't want to, go real deep and get complicated, but what I'll say is many of your clients are probably set up as LLCs, as they should be if they're legitimate businesses. There's also plenty that are set up as just sole proprietors. They just file a Schedule C with their tax return. And so let me just put it in number of terms. If you make over $80,000 a year as an individual driver, more than that if you're running multiple trucks, you can set up what's called a structure of an S corp and be taxed as an S corp. Even if you're an LLC, you just file with the IRS to be taxed as an S corp. The reason you would want to do that is you can pay yourself what's called a reasonable wage in your business. And you can do this in any business, not just in trucking, but you pay yourself a reasonable wage. What's a reasonable wage? There are people out there that say pay yourself $1,000 a month, $12,000 a year. That's not a reasonable wage. There's nobody in America that can live on $12,000 a year anymore. So again, with our relationship with the IRS, we have a pretty good idea what that is. Let's just call it $50,000. We'll say roughly $1,000 a month or $1,000 a week. So if I'm making $80,000 in my business and I'm paying myself $50,000 a year in wages, essentially what I can do is save on my self-employment tax, which I'm required to pay as an independent contractor. That tax rate that covers Medicare and Social Security is a little over 15%. And so again, I'm throwing some numbers out. I'm going to try and make it simple. I'm going to save the $50,000 I made in my business, the $80,000 I made in my business, the $50,000 that I paid myself. There's a $30,000 differential there. I don't have to pay self-employment taxes on that of 15%. So I just saved myself $4,500 in self-employment taxes. It gets a little bit confusing because now I have to actually do payroll. I have to set up payroll. It's going to cost me a bit more money. I have to file an S corp tax return. That's going to cost a little bit more money. But at the end of the day, in our business, we're going to charge somebody around $1,000 to $1,500 more per year to do that extra work, the payroll, the S corp tax return. But I'm going to save $4,500. So net, I'm going to save $3,000. So again, that's
not to mention the hassle factor, right?
Yeah, right. We can relieve the hassle factor. We'll do all the work for you to do the payroll, to do the S corp tax return. So again, I would call it a tax game, but it's legitimate. The IRS completely allows it. You can get audited and it'll stand up to scrutiny as long as you're doing it the right way. So, I guess I start off with something that's a little bit complex, but it makes sense because also having that LLC and that S corp helps me with legal protection, right? ICSA is in the insurance business, and so we have accidents, right? And so if I get in an accident and having that corporate structure set up, it's going to help protect my personal assets. So again, I just throw that out for food for thought. We have a lot of drivers that we go through and analyze that are customers every year. And if they're making over that $80,000, this is a structure we talk to them about saving money on taxes. I'll jump into just what you mentioned briefly, Karen, about the shoebox. We process 4 million pieces of paper a year for our clients to put them in profit and loss categories and ultimately do tax returns. And I can tell you the shoebox is alive and well today.
Oh dear.
Not as many people that do it as they used to. Our app is really simple. You take a picture of what you spend money on and you send it to us through the app and we categorize it for you. But there are still plenty of people out there that stuff everything in a bag, stuff everything in a box, and deal with it at the end of the year. I'll tell you 2 things about that. One, it's no way to manage a business. If you don't know your numbers monthly, you don't know where you can do better, and those kinds of things. But 2, it's just sloppy and you lose pieces of paper, and every little piece of paper that you lose relating to your business is like gold. If I lose a $100 receipt because I bought something for my truck, that's going to cost me $20 or $30 in taxes. So the most important thing we advise our clients to do to pay the least in taxes is simply be organized. Get it in a system. Whether we help you and do it for you, whether you use QuickBooks, whether you have an accountant that does it for you, put the numbers in so that you don't lose those receipts. I'm gonna just maybe tease you with a few simple deductions that some CPAs or tax people may not think about relating to truckers. We can talk about sunglasses. You know, everybody wears sunglasses. For a truck driver, we consider that a safety device. You're staring out the windshield every day, all day, and you need to have good vision to protect you from sunglare and those kinds of things. So we'll take sunglasses as a deduction in your business. We can throw out the guard dog. This has been debated and joked about for many years. And so I would say if you've got a poodle in your truck, maybe people don't think of it as a guard dog, it's your pet, right? But at the end of the day, poodles probably bark a lot and they will likely keep somebody away from your truck. If you're in the truck stop and your doors are locked and they think about breaking the window and stealing some stuff and that poodle starts barking, that's a security device. So we can deduct things that relate to you having your dog in your truck. We can deduct dog food and pet supplies. You know, we can't deduct a $5,000 vet bill because your poodle, you know, had some kind of issue. It's got to be reasonable and necessary to be an expense. But again, just trying to get you to think about things that potentially haven't deducted in the past. There's things that relate to uniforms. We can't deduct things like jeans and t-shirts because everybody wears those. But steel-toed boots, if you're in the flatbed business, that protect your feet if something falls and might break your foot, are deductible. Uniforms, if you get something on your shirt that says the name of your business, certainly that's tax deductible. So clothing by and large is not deductible, but things that relate to your business and can display your business are deductible. So I just wanted to get us started with a few things that are maybe things that you haven't thought about before. And I'm going to allow Michael, because he is the enrolled agent. I'm not an enrolled agent. He's a lot smarter than me. He's prepared and worked and managed tens of thousands of tax returns. So he's going to talk about some more detailed, specific stuff. Michael, it's all yours.
Awesome. Thanks, Todd and Karen. So yeah, I want to spend some time sharing some specific tax deductions that apply to the trucking industry. And really the overarching theme here is find a tax preparer that understands trucking in forward and backward, because they're probably missing these types of deductions that are reducing your tax bill. So we'll start out with a real common one that folks might not think about in the trucking industry, and that's the home office deduction. Back in 2013, the IRS made this a lot more simple. It used to be that you had to tally up all your expenses for your home, split and divide it by square footage, and this big, huge mess of paperwork. They introduced in 2013 and still active today, the simplified home office deduction, which is $5 per square foot. So you just get the square room that you use, square footage for the room that you use as an office. Maybe you store items there. Maybe you do have a little office set up where you do your bookkeeping there. Whatever it is that you're using that room for business, and you can take $5 per square foot up to 300 square feet. So that's a $1,500 deduction. Don't leave that one on the table if you've got some place in your home you're using for business. Per diem, hands down the single most important deduction to truck drivers. That's your per diem allowed when you're away from home. So let's quickly go over just a full day and a partial day. In case folks don't understand that, there are two rates. So full day are the days that you're completely away from home. You haven't visited home, you didn't leave home, you didn't arrive home. Those are the days in between where you're on the road. The partial days are exactly those days on the ends. You've got your day that you left for your trip, the day that you returned on your trip. That's partial days. So you should have two partial days for each trip if you're out for a week or so, or maybe you're out longer on the road. You're allowed to deduct 80% of your per diem, and that per diem rate increased again this year. Due to inflation, the IRS usually increases the per diem rate on average every 3 years. So the per diem is now up to $80 per day. And again, you're allowed to take 80% of that. So it's $64 a day that's deductible. The key here is that doesn't mean you have to spend $64 a day on food. Anything you profit, if you're packing your meals, you've got a refrigerator, your microwave, you're shopping at the grocery store, you can create a business tax deduction by eating less than $64 a day in food, but still gaining the full tax deduction of per diem at $64 a day. So don't leave that one on the table. That is huge. That's one of the easy questions you can ask a tax preparer. what's the per diem rate? And if they don't know the answer, run. You've got the wrong tax preparer as a truck driver.
Michael, I'm going to throw something else that I just heard this morning for the first time, doing this for 26 years, that I thought was really cool. One of our tax preparers was talking about the credits you get when you buy fuel at a truck stop. So a lot of people will pick a truck stop chain so they can get a card that you get points for buying your fuel. You can use that to buy things at that truck stop. Anything from showers to meals to CD radios. And what this preparer was telling our client was use those points to buy your food because you're already getting the deduction. You already get $80 a day deduction no matter what. Whether you spend the money or not, you get an $80 per day deduction. Don't use it to buy a product. Don't use it to buy a shower because those are tax deductible. Pay cash for those things that are tax deductible so you can use that as a tax deduction. Use your points to buy your meals because the IRS lets you deduct $80 a day, even if it's free, because you got all kinds of crazy points through the fuel card. So again, just another simple little tip to save money.
Absolutely. Even if you do have a preparer that's familiar with per diem, are they familiar with the spouse ride along per diem? So maybe your spouse has a CDL, maybe they don't. There's still per diem available to your spouse if they're on the truck with you. Maybe they're taking care of paperwork, maybe they're doing directions or taking care of weather navigation. Make sure you're not missing out on the spouse per diem ride along rate. The item I want to bring up as well that's big is paying your children. And so if you have children that can help you with the business, maybe they're cleaning the truck, again, maybe they're helping you with some of the paperwork, organization around your business, you can pay them a reasonable wage, kind of like Todd talked about earlier, engaging a payroll service, getting them on a W-2. You don't have to pay family members the FICA tax, that's a self-employment tax. So you can save on a lot of the upkeep in the payroll costs and get a deduction by paying your family member. The awesome payback or double benefit of that is that when your family member goes to file their tax return, they'll get the same standard deduction on their tax return that you get on yours. So they're not going to have to generally pay any taxes on those wages. Of course, it depends on how much you're paying them, if they have other jobs and things like that. But that's another great deduction to think about if you've got family members that can help out.
So Michael, you're treating them as an employee, not like a 1099.
Correct. Yeah, they have to be treated as an employee, W-2 employee. Yep. Business use of personal vehicles. We get this question a lot from our clients. So you've got maybe a truck at home, a Jeep, or even a sedan, something like that, and you're driving around, you're picking up parts, you're going to get different things while you're on off time, or maybe you're even getting home every day and you're just driving around to take care of things that are business needs, going to the store, getting supplies. Those business miles are absolutely deductible. So you're going to use the standard mileage rate, which is just like the simplified home office that I talked about. The IRS just has a rate at, for 2024 taxes we're filing now, is 67 cents per mile. So all you have to do is track your business miles and then multiply that by 0.67. That has gone up because gas prices have gone up similar to the inflation rates. In 2025, that's 70 cents a mile. So make sure you're taking advantage of those business miles. A lot of folks say, well, what do I need to track? Do I have to keep receipts for that? Yeah, IRS wants receipts for everything. But there are a lot of mobile apps that take care of this. I looked up too that we're not partnered with these, but they were popular on the Google search. TripLog and Mile IQ are two real popular mobile apps that will track your business miles and your personal miles for you. So that makes it super easy. If you're not doing that and you want to just keep a paper log, that's absolutely fine. You got to keep the date of the trip, the miles you traveled, the place you went, and the business purpose. Why were you going?
Michael, I'm going to just say something about that real quick. And Michael and I get to do this a lot. We get to do this on SiriusXM radio and take a lot of questions. And a really common misconception by a lot of people is they want to deduct something for their out of route miles, their deadhead miles. And I think they get confused with the deduction Michael just talked about. At the end of the day, this is for just your personal vehicle, using it to go run errands to do for your business, your truck is your most expensive thing you're going to operate, your fuel, your maintenance, all those kinds of things. And you're way better off taking the actual expense deduction rather than using the 70-cent-a-mile rate, because you spend way more than 70 cents a mile on your truck because it's a big truck. And so what that equates to is when you're using your truck for deadhead miles or running places empty, you're actually deducting the expenses because you're running fuel, you're spending money on maintenance. And so you're actually taking the expenses. So you would be double deducting if you also took this 70 cents a mile for those empty miles. That just gets really confused by a lot of people. So I just wanted to throw it out there in case there's a thought about that.
What about, and I'm just speaking of myself now, but I keep my business miles on my computer. Like, I just plug in, hey, I went to Stewart Transport today and it was X miles. I just put it on my computer. It's like in a spreadsheet though. Is that considered adequate documentation?
Yep, absolutely. So those couple of items I missed, mentioned, like the date and the miles you traveled, the place you went, and the purpose. That's exactly sounds like what you're documenting, and that Excel spreadsheet is a perfect way to do that. Yep.
Gotcha. Thank you.
The bonus depreciation comes into play in transportation industry quite heavily. And I say bonus depreciation because that's been the hot topic to talk about for the past 5 years or so. You may hear Section 179 depreciation as well. Those are really very similar types of deductions, but what they're talking about is recapturing the expense of your purchased equipment. So if you own a tractor or a trailer or even other large pieces of equipment or machinery, those things are going to be depreciated over time. You're going to recognize a piece of that equipment over a longer period of time than just 1 year. So IRS makes you spread that cost out and spread that benefit out in terms of a tax deduction. The reason I mentioned bonus is because the Tax Cuts and Jobs Act back in 2018 introduced 100% bonus depreciation for new and used equipment. Fantastic, but it did have a sunset or a phase out period, and we are in the middle of that phase out period. So 2024, you can no longer take 100% bonus depreciation, you can only take 60%. And that's dropping 20% per year until zero. We'll see what Congress does. Tax law is extremely popular in Congress and in administrations to change and modify and try to kind of move the direction of business owners to take certain actions like upgrade equipment or replace equipment. So the key here, or the point to take away, is when you're working on your taxes with your tax preparer, make sure they're doing an analysis for you about the best approach to depreciation. ATBS will obviously take your options under bonus depreciation and your options under Section 179 and determine what's the best scenario and provide that information to you so that you can make a decision on what you want to do. Maybe you've had a great year and you want to reduce as much tax as possible. So we want to allocate a higher percentage of that cost into the current year you're in, reduce the taxes as much as possible. Maybe you're expecting next year is going to be a highly profitable year. Maybe we want to save some of that expense and tax benefit for future years. So we can go through that analysis with you and work through that. Section 179 is still available at 100%, so you don't have to use bonus. You can choose to use Section 179. The APU fuel credit is kind of a fun one to talk about. So this is technically a fuel tax credit, which is better. A tax credit is better than a tax deduction. So let's go through that for a second. We've been talking up to this point about tax deductions, and those are based on your tax rate. So like Todd mentioned, $100 receipt that you lost might cost you $20 to $30 in taxes. That's because your tax rate might be between 20 and 30%. So that's what you're saving on each tax deduction is 20 to 30%. A tax credit is dollar for dollar. So if you save $200 in a tax credit, you just save $200 on your tax bill. Those are much better, much more valuable. and there is an APU, auxiliary power unit, or reefer unit. If you have those on your equipment and you're using those, what you want to track is the gallons used out of that unit. Usually when you're parked on the side of the road, sleeping in a truck stop or sleeping on the side of the road during one of your breaks, that gallons used in that are considered off-highway business use, and you can take a fuel tax credit for those gallons used. Now, a lot of folks say, well, I don't have a way to track how many gallons I used out of that unit. If you can give us the number of hours the unit ran, like let's say you take 10-hour breaks and you know you took 5 10-hour breaks, we can back into the gallons used based on the hours the unit was run. So we can help get you that tax credit regardless of if you have the gallons or not. But that is definitely something to track and keep on the front of your mind as you're taking breaks and taking your per diem deduction. There's likely a fuel tax credit associated with it. Now, doesn't count for fuel going into the tractor unit. That's going to be used for the tractor. You still get a tax deduction for that, but the tax credit only applies to off-highway businesses.
And what about reefers?
Yeah, if it's an electrical unit, it's not gonna qualify. But if it uses diesel or this off-highway business use, that's the undyed diesel is usually what goes into those units. That's
Right.
what we're talking about. Yep. Health insurance. Oh, go ahead.
One more question about fuel. What about DEF?
Yeah, absolutely. The DEF that goes in, that's the emissions fluid, right? Cleans all the emissions out. That is absolutely 100% deductible. So usually, some folks include that with their fuel costs. Some folks include it as a maintenance cost. Doesn't really matter. It is fully deductible. So make sure you're tracking your DEF. All of those purchases are deductible. The health insurance and healthcare. A lot of folks wonder if they can deduct their health insurance premiums. If you're self-employed and you don't have another option for health coverage, those are absolutely deductible as a business expense. So if you don't have a spouse that's maybe got health coverage offering or family coverage offering, then absolutely your health insurance premiums are deductible. So you can go out to the marketplace, get health insurance, and get that covered under your business expense, get a tax deduction for that. The last one that I really like to talk about is retirement savings. That's my favorite type of deduction because I get folks that say, Michael, I've been in this business a long time. I'm already taking advantage of all of these deductions. Is there anything else I can do to save on taxes? And the best kind of tax deduction in my mind is where you get to keep your money, save for your future, and get a tax deduction for that. So if you're not if you've got cash on hand, you're running your business very well, you're taking advantage of all these deductions I've already talked about, and you're looking for more, set up that IRA, set up that 401k. There's SEP options. We're not financial advisors, but get involved with one. Get one of those retirement plans set up so that you can save for your future and activate tax savings through that.
Oh, Michael, those are awesome. And I'm going to just wrap up with a couple of other things that often cause confusion. When you're an independent contractor and you own your own business, you're required to pay estimated quarterly taxes. A lot of people say, no, I'm not. I'll just pay it on April 15th. And that's okay because really you wind up paying an interest rate that's not terrible. It might cost you a few $100s, maybe even up to $1,000, depending on how much you owe. What we see the problem is when people don't pay their estimated taxes is that money finds its way to doing something else. And then when April 15th comes, I don't have the money to pay my taxes. And so just for those of you that don't know the dates, April 15th, June 15th, September 15th, and January 15th, you're required as an independent contractor to pay your estimated quarterly taxes. One thing about that is the reason a lot of people don't pay them is because their CPA does what's called the safe harbor. And they take last year's tax burden and divide that by 4, and that's what they tell you to pay for your safe harbor this year. So if I have $10,000 in taxes last year, they're going to say you paid $2,500 on April 15th, $2,500 June 15th, and so forth, and you'll be all good. No interest penalties by the IRS. The trouble is in trucking, no year is the same as the year before. And so if I had a really bad year last year and I start making a lot more money this year, I'm gonna underpay those taxes. Or if I had a great year last year and pay my estimated taxes based on safe harbor last year, I'm not gonna have enough money, so I'm just gonna stop paying them. What we do for estimated taxes with our clients is base it on the 3 months prior. So cash flow matches what I pay in taxes. January, February, March are usually difficult months in trucking. It's the first quarter, it's slower, there's not enough freight, and so I don't make a lot of money. So if I tell you to pay what you paid last year divided by 4, you're probably not gonna have enough money to pay it on April 15th. Let's do it based on what you actually earned. So again, just a tip to talk to your CPA about, are you doing actual estimates? Or are you doing estimates based on safe harbor? The last thing I'll say is we get a lot of clients that are in trouble with the IRS. You know, when you're self-employed, nobody withholds money out of your paycheck to pay the government. That's reliant upon you. That's why they want estimated quarterly taxes from you. And if you get in trouble with the IRS, a lot of people run from that. I'll say the IRS has been negligent in their duty. They actually have not collected from people that have not paid their taxes for years. During COVID, they were shut down, they're short-staffed, and they just haven't done a good job. But one day, you do get a letter from the IRS that says you owe $100,000 in taxes. You know, that's a scary proposition for a lot of people. My guess is there are people that were listening to this that are in that position. And so there's a lot of firms out there that prey on you because that's a desperate situation. I can't declare bankruptcy to get out of that. I have to deal with the IRS. There's no way out of it. I have to deal with them. They're going to hound me until I do. We have a tax resolution practice here at ATBS because we know that a lot of people get held hostage and they literally get screwed by these tax resolution firms because I'm in a desperate situation. They charge you tens of thousands of dollars to solve problems that can be solved for much less than that. So if you're in that situation, we're happy to help you. The stories of I owed the IRS $1 million and my tax res person got that negotiated to zero, those are very few and far between. The IRS wants their money. If you have money, they're going to find a way to get it. What we'll do is negotiate, penalties and interest down. We'll negotiate payment terms over longer periods of time where you can afford it. So again, I just throw that out to say that it's scary. Deal with it. The IRS, they don't want to bankrupt you. They want you to earn a living. So they'll work with us to negotiate on that. So Karen, we've thrown a ton of stuff out there. Hopefully just, teasing people with thoughts of ways they can save money on taxes and deal with situations they might be
I
in.
have a question that if a trucker fails to file an income tax for a prior year, say 2022, but then they filed in 2023, does ATBS offer them the service of going back and filing their 2022 taxes for them? You do, because some
Absolutely.
CPA firms will not file overdue taxes other than in the current tax year if you have an extension.
We do it all day long. We literally file tax returns going back, 5-10 years. We have to do tax resolution. And a lot of truckers, it's just their nature, right? They're not numbers people. So they just kind of avoid this and they create the shoebox. And a couple of years from now, the IRS will send you a letter that says you owe X in taxes if you haven't filed that return. Yeah, we'll do back taxes all day long.
Okay, do we have any questions in the chat?
Yeah, we have a couple. So the first one is we talked about how the IRS needs, proof for a lot of different things. What proof is required to get per diem?
Was the last part to get per diem?
Per diem, what proof do you need for per diem?
Yeah, so the way it's done these days on electronic logs is the best way to provide that proof. I know that electronic logs sometimes aren't always available on a yearly basis. They might, clear their records every 6 months or some even do it quarterly. So make sure you're grabbing your electronic logs often. Maybe that's monthly, maybe it's every quarter, but check with your carrier, find out when how long they keep their electronic logs for. But you want to pull those records down and save those. Those are perfect for substantiating your per diem to the IRS. If you don't have those logs, oftentimes settlements are a great way to do that. And if you don't have those, you could even go to your bill of ladings. So really what they're looking for is what dates were you traveling? That's kind of what they're looking for. And then where were you traveling to and kind of how long were you gone?
And one thing I'll say is the ATBS app has a per diem tracker right on the homepage. So you go in there and it makes it really easy. You just push the button that says, I'm away from home today. February 20th, 2025, and it will put that $80 deduction in there, and it'll add up throughout the whole year. It'll add up your per diem deduction for you.
That's awesome. I have another one to suggest, a deduction, which is dues, membership dues. Our members have very cheap dues, but it's still deductible as a business expense. If they belong to the Chamber of Commerce or, any other type of organization like that they use to inform their business, those costs are deductible. And I don't know how often people think about that.
You're totally right, Karen. Absolutely. If it's related to your business, it's deductible. Absolutely.
Yeah, we even have that challenge with folks here occasionally. You've got a tax preparer asking, is it black or white or gray? And as Todd mentioned, oftentimes it's gray. The IRS doesn't identify in the code things that are and aren't deductible very often. They leave it up to the business to make that determination. The technical terminology they use for business deductions is ordinary and necessary. So if you can meet both those two definitions, is the expense ordinary and is the expense necessary for me to do my job, it's deductible.
If a driver needs to lease a truck or rent a truck for a short period of time, say theirs is in the shop, is that completely deductible, those costs, or do they have to just deduct the expenses that go along with that rental?
It's completely deductible, and everything associated with that truck, the fuel, whatever they have to pay. Yeah, at the same time, my truck that I have, if I'm leasing it and I'm paying $3,000 a month, I'm deducting that too, or if I'm depreciating it. So, it sounds maybe a little bit like a double deduction, but it's a cost of my business. I've got to have the truck in the shop to get worked on. I've got to have the truck to make money that I'm renting. Both absolutely deductible.
Gotcha.
Yeah, we've even had folks run into, I'm stopped for my reset in a town I'm not familiar with. I don't have any transportation. Can I order an Uber to go get supplies? Absolutely.
Really? I hadn't even thought about that one. That's fascinating. So as we wrap up here, we're already into 2025. And you gave some tips early on, but what do you say to the member who is only thinking about, well, I got to get my 2024 taxes filed first, but what are things that they should for sure be doing right now for this tax year so that they are prepared come next fall or next winter?
I know Michael will have some, but a couple that I think of is that S corp structure we talked about at the very beginning. That has to be done at the beginning of the year. The deadline, I think, is March
15th.
March 15th to file for an S corp to be taxed by the IRS. So if you want to set up that structure, you've got about 20 days, 25 days to get that done.
By March 15th, you said?
Yeah.
March 15th, okay.
Yep, setting up that structure is really important to get done at the beginning of the year. Other things, I'll say a lot of people like to go buy things to save money on taxes. Michael and I were doing this a week or two ago, and somebody called in and said they're making a lot of money, I think 200 grand. They're like, I want to go buy a new trailer, I want to buy this, I want to buy that, so they don't have to pay any taxes. And my advice is, if your truck is old and worn out and you need a new truck, go buy one. That'll save you money in this tax year. But if you just think you drove down the road and you saw a nice, pretty truck that's more chromed out and has a bigger engine than yours, and you want to buy it so you can save money on taxes, at the end of the day, you're only going to save 20 or 30% of what you're buying on taxes. So don't go buy things, a chrome bumper. Don't go buy things to think you're saving money on taxes. Because at the end of the day, you're spending money that you can use otherwise in your life or in your business. That's a really important point. Michael, what else do you think they should do right now?
Yeah, analyzing equipment is always popular throughout the year. You want, is this the truck I want to be driving for the next 3 years? Should I be thinking about replacement? What sort of preventative maintenance might I need, and planning for that, making sure you have savings set up for those things. Those are all super important things to prepare. The biggest thing for me is, how do you run a business without knowing your monthly standings? So creating that P&L or a system of cadence where you know how your business is doing. You have a pulse on how your business is performing. And that's the probably the biggest impact of anything that I could tell somebody about their business and getting ready for taxes is having a pulse on your business is going to tell you when anything is slipping or doing fantastic. Where should I focus my energy? Am I slipping on fuel? Am I not prepared for maintenance? What's causing the blips in my everyday life? And a profit and loss statement is going to be critical to that.
So if I buy a used truck, that's already been depreciated, right?
By the person that originally bought it, yes,
Right.
but it's new to you. So whether it's new or used, whatever you paid for it, you can depreciate that asset fully. So a new
And
truck,
does that-
150 grand, a used truck, 60 grand, I can take that 60 grand and depreciate it, kind of like Michael described earlier.
But the bonus depreciation is only on new equipment, right?
New or used for bonus depreciation. So
Really?
yeah, that
I don't think
Yeah.
I knew that, and I'm betting a number of our members don't know that.
Yeah, that was a huge implementation with the Tax Cuts and Jobs Act because there wasn't a huge incentive to buy used equipment, and bonus depreciation changed that.
Gotcha. Liv, anything else in the chat?
No, that is it.
Okay. Any last words for our members?
I think the one thing I would say is there's a lot of chatter right now about tax changes. The last biggest tax changes we had was under Donald Trump in 2018, the Tax Cuts and Jobs Act. So I just say, keep an ear out, and ATBS puts out a great newsletter that updates anything that changes. Like we've talked about for the last 45 minutes, the best thing you can do for yourself is be educated, because there's a lot of stuff you can miss that changes. And if you're not aware, your CPA may not even think to talk to you about them. So just stay informed. Taxes are confusing. They're scary, but the more you know, the more you'll save.
And I would just say, if someone else is doing your taxes, whether it's a family member or a CPA or whomever, I would encourage them to watch this webinar, because I think we've heard some things that some of us didn't know before. I think it's extremely helpful. And last but not least, the guys know what's going on in the tax and accounting world. And, none of us has time to become the expert that you almost need to be, in terms of taxes and accounting. So we are very thrilled to have ATBS as one of our vendor partners, and we would encourage all members to take a look at them and think about becoming a client of theirs as well. And with that, I will say thank you so much again, Michael and Todd. I think it's been a valuable learning experience, and we hope that a number of members will take the opportunity to review this online.
Thank you, Karen. Everybody
Thank you.
drive safe.
Have a great day.